Today, we speak with Bill Driegert, former head of operations and co-founder at Uber Freight, EVP, and head of trucking at Flexport, and now EVP of the Convoy platform acquired by DAT Freight Analytics. He discusses market conditions, the shutdown of Convoy, and how DAT acquired its technology.
There's just so much waste and inefficiency when money is free, and you get into a lot of bad habits. You want to get the 10,000x return, and you know that to get that, you have to bet on companies that have massive TAM opportunity.
He also explains how the deal came together quickly.
By the end of the day, we had agreed on terms. What we acquired was not the business. We acquired the technology, and then we had to go back and rehire the people. There are a lot of people that wanted to see this tech have a second life, and if there was that opportunity, they wanted to jump in.
We got a lot of insider information about market size, strategic decisions, and practical lessons from the process. Let's get into it.
Yeah, I moved here originally because I wanted to get plugged in, like the VC community as well as just the founder community. And in supply chain logistics, there's a bunch of like meetups and dinners, and it's a lot of smart, motivated people here.
And you moved how many years ago here?
I moved down in 2016.
It's cool to see there's a definite vibe and energy. You're on the streets and everybody's in tech and very ambitious. I feel like it's the right place to be if you're trying to build something huge.
Yeah, how does a family conversation like that look like when you start proposing, hey, let's move cities?
Well, my wife we were in Seattle with Amazon, and she loved Seattle. And it is a bit more of a mellow vibe in Seattle. And also when I came down here, it was for COO role at a post-Series A. So going from Amazon to a smaller company, that she was a little more concerned about, are you making the right bet in terms of career, going
Sure.
from Amazon to a startup, because of the risk associated with that. Mm-hmm. But from quality of life, I think the other part is, of course, it's very expensive down here. So even from, at the time, Seattle to SF, it was 2x the cost per square foot.
Really?
Yeah.
I heard Seattle's not that cheap, per se.
No, it's gone up significantly. In fact, my wife used to forward me the Zillow of the house we sold, because it went
You just keep going up.
It went
and
up
and
60% since we moved.
Wow.
Yeah.
That might hurt, yeah.
So we know you really well, and just to kind of level set with the audience, there are a lot of people that know you, but maybe some don't know your background. Mind giving us a 10,000 foot overview up to Flexport, and then we'll get into the fun stuff?
Yeah, and I'll start at the beginning, because we were talking about the mechanical engineering earlier. Actually, I graduated high school in '96 in Richardson, Texas, outside of Dallas. Moved to Atlanta to go to Georgia Tech on the intent that I wanted to be a race car engineer. So I started down the mechanical engineering track, and I wanted to build race cars.
Did you join SAE?
I did, Formula SAE. I was on the Formula SAE team. That didn't last too long, because I then moved to Vermont to start a race fabrication shop with a friend of mine that I'd met because I had started to do rally car racing. And I went down that path for about 2.5 years. We started a part shop, we were building race cars, and then supporting cars for privateers that were racing. And very hard to make money. This was also right around the dot-com crash. So dot-com crash happened. We lost a lot of clients overnight. It was just a very dramatic shift in terms of our forward-looking revenue picture. And so I decided to go back to school, moved back down to Dallas, and went back to school at SMU in Dallas, which is where I finished. I took an internship. There weren't a lot of jobs at the time, so I took an internship at Frito-Lay, which was in supply chain, and that's really how I got sucked into the supply chain world.
Once you get in, man, you don't get out.
Yeah.
So you started on the shipper side.
Yeah.
Okay.
Yeah, Frito-Lay has a very strong supply chain team. That eventually became the PepsiCo supply chain team, which is in Dallas. One of the colleagues I worked with back then was Doug Miller, who went on to lead PLCI, which was their freight brokerage. So there were a lot of, it was a great place to get entry into that space. My focus out of the gate, though, was production planning, manufacturing planning, inventory planning. I was working on planning systems. What now would be more data science, building optimization engines to optimize production plans and distribution planning, what loads come from where, how big they should be, how you should plan the production lines, all of that.
A flip phone, a fax machine, and a pager walk into a bar. The bartender says, "What is this, a museum?" Technology moves fast. What was cutting edge 20 years ago is now more nostalgia than necessity. Sure, a flip phone can still make calls just fine, and a fax machine technically works okay. But why settle for fine when you can have better? If your back office technology still relies on email inboxes and manual workflows, it's time for an upgrade courtesy of ePay Manager powered by OTR Solutions. With ePay Manager, you can modernize your processes, streamline invoice audits, and automate payments with proactive workflows that don't rely on those email inboxes. The result? Faster invoicing, stronger security, and 50% lower back office costs. Don't let your business get stuck in the past like that pager you stopped carrying in 1999. Visit epaymanager.com or text ePayFC to 80483 to bring your back office into the modern age.
I can't even imagine trying to coordinate a production plan prior to like what we have, the type of technology that we have today. That would be.
Well, there was a lot of. I got very good at VBA and building macros and Excel sheets. So, but we also on the back end, a lot of the optimization tools are the same today as they were 25 years ago, because like solving mixed integer programming and linear programming, that space hasn't evolved like as fast. Like the new tools are machine learning, AI, all these new capabilities. But if you've got a closed form optimization, you're solving it the same way you were 50 years ago. So that part hasn't evolved as much. But what happened at Pepsi is then I found out about this master's program at MIT. Pepsi said, "Hey, we'll sponsor you through that program." I went to the master's logistics program at MIT 2002 to 2000. Yeah, man, it's a long time ago. 2002 to 2003. And in my class,
We're not counting, don't we?
yeah, in my class was Jeff Silver as well as Chris Pickett. Jeff Silver had sold American Backhaulers in '98, then went to C.H. Robinson. He left C.H. Robinson and they put him on a 5-year non-compete agreement. He said, "I'm going to go get a couple of master's degrees." Went to MIT, also got his MBA at Michigan. But I met him at MIT and he was definitely recruiting because he already had in mind that he was going to start another company. Okay. But this was, again, 2002 to 2003. His non-compete ran out in 2006, April 2006. But we stayed in touch and he said, "Hey, like, call me, I'm definitely going to do something in April 2006. So I called him in April 2006. He had already hired 3 developers. And he hired 3 developers because they had been developers for Paul, who had, at the time, was starting Command. And he had been restricted from building a platform because C.H. Robinson sued him on IP and basically shut him out from building a platform. So Jeff came in and said, "Hey, I'll hire your developers. We'll build Bazooka." And that was the start of Coyote. And originally we were just going to build tech and sell it to the market. So between April and August, that was the plan. But within 4 months, we pivoted and
Let's just in-house this.
Yeah, it's in-house it and build a brokerage around it.
I mean, I remember the lore behind the origin story as a new trainee. I started in 2014 and we heard about all the stuff that you guys did and like, "Oh, we'll build the tech." And we're like, "Wait, this is too good.
Yeah.
We need to like actually use this in-house." And obviously it was incredible unlock from an efficiency perspective, but.
An interesting part of the lore there too is that the very first user of Bazooka was eGlobe Logistics, which was a European freight brokerage based out of France.
Wow.
Yeah.
Wow. Okay.
Yes.
Wow.
Yeah.
And so they were using it for the domestic side, like within Europe?
Yeah, and then what happened is Jeff ended up investing like a third into eGlobe. Eventually we did an acquisition of them. They became like Coyote, the first Coyote Europe. Coyote took a couple stabs at.
I actually didn't even know Coyote had a European office.
Yeah.
Wow.
Yeah, a couple times. But yeah, right out of the gate. And being over in Europe and seeing how they operated was actually one of the Jeff came back from that trip and was like, "We got to just build a brokerage." That was like August of 2006. Yeah.
Okay.
Almost 20 years ago now.
I know, it's wild.
Insane.
Yeah, like I said, we're not counting.
No, never.
I ended up spending then 8 years at Coyote doing a lot of different things along the way. Like early on, I just kind of got thrown when we launched intermodal initially, when we launched LTL initially, spun that up, spent a lot of time on the road, kind of learning the motion of sales. I was coming from a non-sales background at all, and Jeff is super sales forward, so it just put me in front of a lot of customers right out of the gate. Spent time on the floor booking, and then we built out our internal analytics team, consulting teams, other capabilities as we scaled, and so just did a lot of different things. Last big role there was managing the engineering team, and then I left and went to Amazon for 2 years. And this was right around the time that it was kind of in the wind that Coyote was in acquisition, I just felt like right time for me for next steps. I had talked to the people at Amazon a couple times, and it was a very interesting time at Amazon too, because this was still 2014 at Amazon. There were still headlines and front page articles about how Amazon was just like a money-losing business funded by venture capital that was never going to make money. Like,
I don't know if I remember such times per se, but I know that they existed. So.
Yeah, Amazon, because it was unprofitable for, I don't know, like 10 years plus. It was, in fact, Amazon really created the template for this idea that you continually reinvest your profits into business to drive scale and to scale over all else.
Yes.
Because that really wasn't how any business was run. When I was in business school, it was just anathema to how you think about building a business.
What were they, out of curiosity, what were they teaching? Contrary to what Amazon would do, just keep collecting the profits and
yeah. I mean, EBITDA, you got to get profitable as fast as possible. Like the whole idea of being unprofitable for multiple years just was not how businesses were built 20, 30 years ago, with some exceptions. If you look historically, there's always these outliers, companies that just saw that value or were more thoughtful, because clearly it's if you want to scale as fast as possible and drive a larger enterprise, and you feel you're in a competitive space where scale matters and you need to get ahead of the competition, then yes, why wouldn't you continue to fund money into scale?
Sure, yeah.
And then that got kind of over-indexed as we got into the Uber age, right, and the hyperscaling, where it was just
just pour money.
Just pour money, because you got to scale faster than anybody thought possible. But
in retrospect, how do you look at that type of an investment strategy? Was it necessary?
I think you've got to adjust your tactics to the conditions on the field. And so if everybody else is pouring money, then clearly that's the game being played. And if you're just going to get run over if you don't. So I think money was free effectively, right, and cheap. So that was the strategy that worked at that time. The downsides is it definitely creates a lot of very bad habits and bad behaviors. And if you look at successful companies and Fortune 500 companies, a majority, like an outsized number of them were founded during recessions or depressions or downtimes. And why? Because if you can win when things are rough, then you'll be better positioned for the other side. And that's kind of the journey a lot of companies are going through now, where it's like who gets to the other side are going to be the survivors and well positioned to succeed, because there's just so much waste and inefficiency when money is free, and it's just you get into a lot of bad habits.
Yeah.
Totally. I mean, we had the conversation yesterday just thinking about companies raising during this down period.
Yeah.
And, they have traction, but they have to be so much more disciplined
Yes.
to make the runway as long as possible. But you're so much better positioned when you see an uptick because you had to battle through the fire. It was not easy at all. It's just a testament to being able to run a sound organization.
It just forces a lot more discipline.
Yeah, profitability all of a sudden started to seem like it's just like a rational thing, you gotta, we gotta be profitable,
Yes.
And I remember hearing so many stories from, or like at least reading on X, like that profitability, without it, you're just not gonna be raising these. And people were just like, I don't know what's going on, and trying to comprehend this stuff. So it's totally different. Even 2 years, was it 2 years ago? Probably 3 years ago, maybe?
Yeah.
What's that change?
But it's also it's how a lot of VCs operate. The idea that you want to get the 10,000x return, and you got to place a lot of bets, and that 90% of them aren't going to get a return, but that one that does is going to be 10, 100,000 plus x. And to get that, you have to bet on companies that have massive TAM opportunity. And if they have a massive TAM opportunity, and other companies are funneling money into that TAM and chasing it, and you think that they have a realistic shot of capturing it, then it just creates all these weird incentives, particularly when money's cheap.
In freight, time is money and efficiency is key. That's where Levity comes in. Imagine automating your email operations to do more with less effort. Levity connects directly to your inboxes, extracting vital information from emails and attachments in real time. It seamlessly integrates with your TMS, empowering you to quote faster, build loads more efficiently, and book more freight in less time. Whether it's incoming emails from shippers or carriers, Levity's got you covered. It understands any language, any format, and even interprets non-standard formatting. Visit levity.ai today to sign up and get started.
What do you think about TAM in our space? There's different ways to essentially look at it. Like there's actual movement of goods, which I feel like a lot of companies may used in the incorrect way. Like a lot of maybe freight tech companies are like, hey, there's $800 billion to
Yeah,
spend,
yeah.
right?
How much?
Which is like,
how much could you capture?
how much could you capture?
Yeah.
But they're selling like software, for example, right? And those two things don't go together. Like, have you thought about there being different TAMs in this space, software, the actual movement of goods? Is there a difference in your mind?
Well, and this is where I think that the right approach for startups should be to narrow your TAM as much as possible out of the gate, because I think way too many people are like, oh, it's the whole basket. I think this was a challenge with Uber Freight and Convoy as we went to market, is you're looking at the total brokerage TAM and you're saying, oh, the total freight market is $1 trillion across North America. We think brokerage can be 300 billion of that. We think as we make brokerage more efficient, it'll scale as a portion of that over time. The challenge is that it was never a real TAM in so much as if you're going to market as a broker, you have there's just these structural constraints on actually capturing that TAM. More than anything, the methodology by which shippers procure, right, is always there's no shipper for which they're using any broker for 100% of their freight, or any provider for 100% of their freight. So naturally, then that creates a constraint on TAM. And are you actually going to go re-engineer how they think about procurement? Unlikely, right? Or that's probably a multi-decade journey. So realistically, your TAM is maybe 10% of that brokerage TAM, because at max, because that's probably the largest you could get with any particular shipper on a perpetual basis, just because of the competitive nature of the market. And so once if you take a more realistic approach, and I think it also just allows you to focus more on and not kind of overextend. Within Convoy platform, as an example, our wedge and our focus is very much on one side of the market. It's owner-operators and small carriers. I'm not trying to bring mid-sized carriers or large carriers into the fold. I want carriers that can use the app, and that's like a constraint on the model. On the other side, it's from a broker perspective, I don't want to be 100% of the broker's freight. I want them to put all their freight on the platform, and I want to book some portion of that fits for these owner-operators. Those two things converge, and over time, I think 40% of the market will move on small carriers and owner-operators, and that's likely the upper limit of the TAM. But I'm not going to define the entire space as the TAM, or every market. I want to zero in on the product market fit and zero in on where we can actually build a wedge. Because if you go in and say, it's $1 trillion North American market, that's the TAM.
I feel like almost every freight or freight tech pitch deck has used
Every single one I've ever seen.
Yeah, every brokerage startup for like 5 years there, it was always, it's an $800 million domestic market. That's our TAM.
Good luck.
Yeah. Yeah, and then how much net revenue can you actually capture out of that? I think that was the other interesting thing in the early days of investment in the brokerage space, is how there's clearly a misunderstanding in how revenue was counted.
Very much so. I think I saw something on X where there was a realization, and someone was like, wait, so you're telling me these revenues aren't net?
Yeah,
do you remember that?
It was Bill Gurley.
I was flabbergasted.
What was this again?
Yeah, Bill Gurley from Benchmark, who's a famous, infamous figure, particularly in the history of Uber. Yeah.
Yep.
Had a X post that was, I'm going to paraphrase, but it was effectively what you said, that, what do you mean it's not like with net revenue, or like he didn't understand that the gross revenues getting counted against the brokerage were not similar to SaaS revenues, right? High margin, high beta. Like the idea that, I'm not booking the net revenue as revenue, because realistically, like the revenue opportunity, if you're doing a SaaS equivalent for brokers, would be that your net revenue spread, not the
correct.
Not the gross revenue.
Difference between what the shipper pays and what you pay the carrier, right?
Yeah.
And then of that, you need to subtract your operating expenses.
Yeah, and so mentally for the VCs, if you're trying to map it to like SaaS equivalents, that's how you should think about it, but not the gross. But they were thinking about it on the gross, and people were raising based on that, right, and getting valuations based on that, which wasn't always, I'd say, accurate math.
I mean, it gets dicey, right? Because you're thinking about building a tech-enabled organization that has freight margins, and so as you continue to scale this thing out, you're paying tech salaries and all this stuff for R&D, and the margins just simply are not there, but you raise that a massive valuation relative to what gross.
Well, and I think that's always been a problem for a lot of the first generation tech-oriented logistics and freight providers, is like the amount of traditional service-based shipment revenue you need to support those tech organizations is just massive.
Huge.
Yeah.
This isn't in our industry, but I think, like, for example, something like Brex or maybe DoorDash would maybe be an example. Is their market cap based off of their gross revenue, or is it
Those are higher margin, like the Uber or DoorDash, like per transaction. I don't know. I don't know all the economics on that, but yeah.
I feel like maybe one benefit of using gross revenue is that the larger your revenues are in that sense, potentially maybe you have better, totally outside of my domain, I might be full of shit right now, but maybe you have better access to debt capital, potentially based on how much money is actually kind of moving through the company, but I have no.
I think
that window or that opportunity is actually largely closed. I think that what happened is you had a lot of new tech investors stepping into the space in a short window of time and throwing money into it, and I think a lot of follow-on investments. So I think you just had a certain amount of momentum that was there. That's people learned, right? Mm-hmm. Learn these lessons. It's just it's a savvier environment.
They just caught onto the wave, and yeah, fair enough.
So when you think about Flexport getting into domestic brokerage and transportation with the Convoy acquisition of the tech, I'm intrigued about how you're deploying that, what's worked, what's been interesting, kind of absorbing all of that, and then rolling out in a new fashion.
Yeah, I touched on a little bit of this in terms of just our wedge and how I think about it, but just to walk through the timeline. So it was like Thursday that they wound down and notified their employees that they were done. Brian and I engaged with Dan that next morning early, and by the end of the day, we had agreed on terms. And part of why that happened is that it is a non-public founder-led company that can move quickly. Yeah. Afterwards, I heard from a lot of companies, we wanted to make an offer, we wanted to do this, right? But it's just they couldn't move as quickly. We were very fortunate as a result, and I'd known Dan, I believed in the tech, I always had believed that Convoy had an incredible product. We can Monday morning quarterback a lot of the decisions made there, but from a product, they had definitely delivered value, and there was a good business buried in there, but there was just a lot of pieces around it. And so what we acquired was not the business. We acquired the technology, and then we had to go back and rehire the people. So effectively, we had to get them all employment, negotiate individually for everybody that we're bringing back on. And that initial batch we brought on, I want to say it was about 45 employees onto the team. And since then we rehired additional Convoy personnel. But it was like buying a broken F1 car and trying to buy and then trying to hire the engineers to put it back on the track. We had to totally rewire everything, because if you imagine all those contracts were effectively dead or trying to get them to transfer, so your AWS, your Snowflake, all that stuff, you got to rewire it all on the back end. Plus you have this massive code base that was built with, at peak, hundreds of engineers working against it, which now you're trying to scale down to a manageable code base with basically, and from an engineering perspective, you're talking 20, 30 engineers that are actually managing it at that point.
Nice and lean.
And so what was great about it is we were able to bring in a lot of so there were also a lot of believers at Convoy. So when it went to that transition, I think there were a lot of people that wanted to see this tech have a second life, and if there was that opportunity, they wanted to jump in. So, and if you think about going through an org that gets downsized that much, who are you left with? Most committed, the true believers, people that really have an interest in seeing this carry through. And how quickly they were able to re-engineer that and get back to launch was just incredible in retrospect. So we relaunched it in February, went live, and then it's just been scaling steadily since then. When we initially went to market that year, we thought there were going to be 3 potential paths we could take this. So one was going back as a broker and enterprise and selling into enterprise. The other was selling to brokers. And when we went through the transaction, Dan was also super helpful through that whole process. And he said right out of the gate, this is where I think the opportunity is. And I was already leaning into that because we had done something very similar at Uber. And that had been my project, and Clay was on the team right now, had been helping push that. And then the third was drayage, because Flexport, we got a ton of drayage, so it made sense to explore that as an option. We did get some shipper traction right out of the gate, but we got a lot more brokerage traction. And so by April-ish, we had already decided we're not going to go the first party route. And by June, we made a hard pivot, and we're very public about, hey, we're going to cancel some contracts in process. We're going to shut that side down. We're only going to focus on brokerage going forward. And why? Because it was a couple things. One, it was very clear that nobody else would be able to do that as well as we could, because nobody's going to go back to market, I think, in the next 2 years and go invest $1 billion trying to build up another digital freight provider. And the benefits of that is that you had 8 years of dog fooding the tech, refining the tech while using it, and automating every step of that transaction from end to end. And there's just so much iteration and investment and refinement that happened in that process. And we knew too that Uber Freight was always going to struggle to market that as effectively because they were a broker, they were 4PL. Like there's just a conflict built in that market. And that if we just said, hey, we're just going to go after brokers and build brokerage tech, it's much cleaner. We've got this incredible technology and it's a unique wedge. And on the other side of the market, what we've found since the very beginning was that small carriers prefer using Convoy versus any of the other DFM options in the market. And why it's just a easier, more well-engineered consumer-grade experience from end to end. If I'm a carrier, I can take a load and never talk to a broker if I don't want to, or if I want to talk to a broker, I can, but like there's very few places where you can do that every step of the process from end to end, and I know I'm going to get paid. So no matter what broker's on the platform, they know they can get quick pay options, they know they're going to get paid. That gives an incredible amount of confidence. And
is that financing that Flexport now provides the company with, or is that part?
Yeah, we manage the payment side of that.
I didn't know that.
Directly. Yeah,
that's awesome.
Because it was it was built in for first-party brokerage. So we started with a fairly constrained go-to-market on the carrier side, in the sense that we weren't going to take away any automation. That just took away from the value prop from the carrier. So it always made sense that we would manage every step of that transaction from end to end on the carrier side, which makes it a little more complicated on the broker side because from an integration, you have to integrate every step of the transaction. And there's companies that do just like digital freight matching or just tracking or just payments. We're the only ones going to these TMS providers and say, hey, we need every piece of that because that's how the product works.
Right.
But that's why small carriers prefer it, because I know I'm just going to have a consistent experience. And now I have access to freight across multiple brokers, and there's no other place I can do that where it's neutral and you just have the same level of scale. So that was that pivot we made in middle of last year, and then it's rapidly accelerated. I think the market had to get comfortable a bit with the fact that, hey, we're not going to go after brokers, and really we saw a dramatic acceleration in Q4 of last year, and then it's just been very steady since then. And we've got a lot of interest.
Is there a difference in providing factoring services or collecting from brokers compared to shippers? Is there any noticeable differences?
No, not. I mean, on the broker side, we definitely have to underwrite every broker. We have to make sure, brokerage market can be a little bit volatile. As we went to market, we focused more on larger, more established brokers, and that's been most of the conversation. It's really been like the top 2,000 brokers we've been focusing on.
Okay.
So
on the broker side, it's the larger organizations.
Yeah.
On the carrier side, it is the individuals.
And we're totally, like if a carrier is a factor, they send us the LOI, and then we'll pay the factor if that's a case with the carrier. And we're in good conversations with all the factoring companies, all the payment providers, all that, because for us it's more, we want to maintain that carrier experience. I'm less concerned with exactly how it happens mechanically on the back end versus that from a carrier experience, they know that they have a consistent payment process.
That makes total sense.
I mean, there's a lot to be said about friction, and the more friction there is, the harder it is to get people to adopt the tech. And in our industry, people are not always the most tech-enabled. And so if you own that piece, makes it a whole lot easier to continue to layer on whatever may be on the product roadmap, because the user experience is very, very simple.
100%. Yeah, and it's hard to get every one of those pieces right. And that's also from an investment. That's where that $1 billion of investment goes in, is because there's a lot of tech companies that are solving like one slice of that at a time. And then what that creates on the other side is if I'm an owner-operator, so put yourself in your owner-operator's shoes now versus again, like 15 years ago. 15 years ago, how do I find a load? Like, let's say it's 10 p.m. on a Friday night. I just found out, I was supposed to have a pickup tomorrow, and it got canceled. Like, what do I do? It's very limited options. I go to DAT, I look, nobody's going to pick up the phone. What can I do? Now I can book a load. And not just through us, but through other options, but we're the only neutral option. We're the only marketplace that allows that. Because I can go to C.H. Robinson, but a lot of those other tools aren't fully automated. There still will be some manual check in the middle or some process that breaks the flow from a carrier perspective. But But then from a broker perspective, now I know too, I can post a load on Friday night. Maybe like a carrier will book it, and this happens every weekend. Like there will be loads booked all weekend long. There will be loads booked at 2 a.m., 3 a.m. Because brokers or carriers operate 24/7, right?
Totally.
Brokers don't. Brokers operate with a window, and most freight is booked from 6 a.m. to 10 a.m. And you see it. And I used to have this great slide that showed like a heat map of when loads are booked on a traditional brokerage versus on a digital platform. And digital platform, it's pretty smooth. It's basically 24/7. 30% of loads get booked after hours. So you can imagine from a carrier experience, that's better. Now I'm like operating on my schedule. But from a broker experience also means now I can just let stuff ride over the weekend and come in Monday and it's done. Right?
Are there any supply chain side effects? Is it like with that smoothness difference versus those?
Well, it makes it more responsive and it makes it more reliable. We've definitely seen this in our first party network and legacy Convoy, but also with brokers is you do like almost every week there's some example of a load bouncing like an hour before pickup at like 11 p.m. and it being recovered and a carrier still showing up on time and picking it up. Wow. Because in those sorts of magical scenarios that could not happen with the traditional brokerage. Usually like you see that most with like local haul freight where these carriers are always just skimming the boards and looking for opportunities. But it shortens that cycle.
Today's episode is also brought to you by Control Chain. Struggling to find loads? Control Chain offers a cost-effective solution for carriers to secure more freight contracts with reliable shippers. Plus, you get a free tool that automates tasks like managing order details, updating customers, and sending PODs. Say goodbye to spreadsheets, emails, and phone calls. With Control Chain, you can manage everything on one platform, from planning and execution to getting paid. Sign up at controlchain.com and start receiving loads today.
There's just a level of agility that is hard to be able to replicate one-to-one as a brokerage with a failure or whatever. If you don't have the swath of coverage, that can just happen immediately.
Yeah, and it's particularly beneficial to brokers for this carrier pool as well, because if it's owner-operators, how do I traditionally get access to them? Probably via a large marketplace, inbound calls, which that whole process is getting more efficient with AI now, and everybody's setting up their automated dial. And I was at a brokerage just last week who said, they're like now their call pickup time is like 10 seconds. Like they never don't pick up a call.
That's incredible.
But they just use the AI to fill the gaps if they can't get to the call. But the call's still all route to the floor, but now they can it's prepped, in some cases pre-negotiated, and then they hand it off. Yeah. So that whole process is getting better, but it's still better if you can get to the carrier before they make the call, right? If you're the first place they look, and if they're looking at you at 10 a.m. and they're, otherwise they're calling at 6 a.m., right? So the way I view it is that we are the preferred place in the first place, and thereby brokers are going to get first access to our carrier pool.
So my brokerage brain is cranking now, thinking about quality of coverage in sourcing. So if I'm one of the top 2,000 and I'm trying to figure out, should I give Convoy or should I work with Convoy to have access to the capacity? What's the procurement strategy from a quality perspective that someone in that seat could think about or would maybe have questions on?
Great question. It's like a lead-in question because this is where I love talking about the quality side. There's multiple elements to that. So from a pure compliance, we have all it's all automated. We have all the normal plugins. Convoy invested heavily in fraud detection, and this is one area where we have what I believe is best in class, best in market, particularly for long tail carriers. Because those are the carriers too that tend to get caught out because they don't have enough inspections, they're too new. Like we will work with a brand new carrier, we will work with no inspections. We have our own methodologies, particularly on the fraud side, to determine that. We have our own safety estimates as well. But on the fraud side, we just have very robust information because we're dealing with device driver level information. And as a result, what you tend to see is it's the same drivers, the same bad actors that kind of repeat over and over and over again. And so once you can kind of identify them and identify, it's just them trying to trick you again, right? And there's a lot of forensics that go into that, but we've effectively eliminated fraud-based theft out of the platform. So, yeah, Ryan dropped a tweet a while back about 380,000 loads with no thefts, right? We continue to add to that roster in terms of loads with no thefts on the platform. And the level of diligence that team is able to apply is when they'll send me reports of we have a lot of cases where we identified a bad actor before it showed up on the other fraud reports, or in cases where we identified it, we found out a week later that somebody else had a theft associated with that. Yeah. And our head of that team, Eric, is fantastic. He's well plugged in the industry too, and all the, it's something that I fundamentally believe we can help kind of improve the industry, provide the data, engage on that. But it's quality perspective, very confident on the fraud side, and then beyond that, from a tracking and performance, we do blacklist drivers if they're not performing. They get continual. I was going to pull the app out, but I don't have this ready to go. But they get continual performance feedback. So it's not just on time, but it's also how they engage in the app.
Yeah, totally.
And there's 2 tiers there. What will happen is if they will basically get kicked down a tier where they are paying a higher fee on quick pay. And then if they truly don't perform, they get kicked off the platform. And so we blacklist about 5% of carriers on the platform just from performance.
Totally. I mean, if you want to maintain the level of integrity that you have from a service perspective, you don't really have a choice.
Yeah, so from a broker perspective, it's typically the highest performing capacity segment for them for on time.
That's awesome.
So to break down how you guys effectively went and solved the cargo theft problem, there's like it seems like two components, and correct me if I'm wrong. It is the phone, which obviously existed. It's like this giant sensor. But then it's also this network, this curated network. And those are the 2 pieces, the 2 main ingredients, plus I guess obviously some cybersecurity.
Yeah, the fact that we have full visibility to them throughout the life cycle of load, that they have to be compliant to all the engagement points on the app, means that we are collecting device, phone, driver level information, location information, and then we have quite sophisticated forensics on looking for patterns, and then those patterns, it's not always black and white, it's degrees of risk, and if it's a yellow, then we have a manual review. And if they can't reconcile it, right, we won't let them on the platform.
So how come a brokerage that's, let's say, maybe using like, maybe MacroPoint, we can use as an example, but yeah, a brokerage that's using MacroPoint, like how come this is still a prolific problem? Cargo theft is a prolific problem, right? Like why can't others figure it out?
Well, this is, if you look at Highway and other competitors, why they're trying to also get ELD level information, because the more location, again, it's the fraudsters are going to figure, it's a game, right? And that they're always going to try to figure out, okay, what methodologies are they using? How can I bypass that?
Right.
And you see them being very clever, in even at a device level, thinking about, okay, like how can I, spoof location or indicate that I'm actually at the delivery location and things like that. And so it's always a bit of a cat and mouse, and it certainly takes focus and investment. And also I think the fact that some companies that just do tracking they're not going to have that same depth of information, because there's other behavioral information that we look at that may be more about commodities or like patterns of how they engage in the application when they're looking for freight. And also, if you're, I don't want to give away all the, but there's definitely things that, patterns of behavior that indicate that will set a flag off right away, right? And you combine that then with all the device forensics and the connections and the network patterns, and all that creates a more holistic picture, where if you're only the tracking provider or you're only looking at publicly available information, right, you're just not going to get the same result, the same degree of level of resolution.
That makes sense.
I have a question from a branding perspective, right? So obviously, Convoy winds down. There are a lot of ripple effects of that, and you all had the opportunity to absorb incredible technology, get some really, really strong people on the team to continue to build what the TAC platform was, but you have to integrate the brand into Flexport. That seems like a very delicate process. How's that been executed?
Yes, and there were a lot of strong opinions on this on both sides. And I think externally how you perceive the Convoy brand really dependent on your role, the type of, like, in the supply chain, or are you a broker, a carrier, a shipper? And then also your information sources, right, in terms of like your circle of information. What we found right out of the gate, because the first thing I did was talk to all 3 cohorts, shippers, brokers, carriers. The carrier side was very positive on Convoy. What we found is almost none of the carriers that had used it consistently had uninstalled the application. Many of them were consistently checking them on the app, and if you called them, they said, yeah, I would love to turn it, like I would take a load, I check it every day, I'll take a load. It gets back to that experience. Most carriers do quick pay. Most carriers are paid consistently, so that the issues with payments right at the end, Hercules resolved that after the fact, but Most of them had done, if they'd done 100 loads, all went well, and the last one went poorly, but their overall experience was, hey, every time I did it, it was easy. I've adapted my whole lifestyle and way of doing business around digital first or app-centric methods. Then losing Convoy was a huge loss to just how they think about going to market. Particularly for if I'm a local carrier, I do a lot of local freight, and all of a sudden, like, I just don't have as many options, or the other options I have just aren't as good of an experience, right? It's a downgrade. And so Convoy brand was very strong with carriers, which is why we needed to keep that C. We needed to make sure that the carriers didn't log in one day and see an FP and not know what it was, right? Or, Flexport. And that the carrier, so that we've kept the brand on the app consistent throughout, the orange and the C, because we knew that was important to carriers. With brokers, it was, I'd say, most brokers respected the technology, respected the investment, understood the thought leadership. Most of where we would get negative feedback was back to how Convoy went to market originally, or the perception that they maybe hadn't earned their stripes and had kind of come to market as this tech-centric, not broker native type of mentality, where they didn't maybe they overhyped certain things. I got a lot of feedback. We had some of this at Uber Freight too, or maybe just too much marketing, too much hype. Yeah. Like, we've been doing the same stuff for 20 years. This isn't new, which a little bit of that I think is just resistance to change, and just like understanding that there are new ideas here, but what are those ideas, and being able to tease that out. Because certainly there was a lot of stuff that maybe wasn't a new idea, it was just new execution and refined and thought of in a slightly different way. But the fundamental shift towards like app-centric and digital was being pushed by Convoy and Uber Freight quite heavily. And I also think there's a little bit of like, okay, well, how do we keep up and adapt? And so there's a little bit of fear that comes with that as well. And particularly if you're not a tech-oriented company and these companies are getting billions of dollars of investment, like, what does that mean, right? So I think from a broker perspective, there's a little bit of and there was definitely people that were dancing on the grave a little bit from
that pissed me off so much. It was so just egregious. And the thing that probably bothered me the most is that someone took a big risk, a massive swing to try something. They moved the industry forward. Like Dan Lewis and the Convoy team moved the industry forward to be more tech-centric. We're all in a better place because of it. And so they failed. But like, did you ever go try to do something big, right? Like, not everything works, right? That's just like...
I think you always have that resistance though in any market. Like, change creates friction, and some people are going to get caught out. So yeah, it's
way easier to be a keyboard warrior.
What I think the other thing that's happened though is all these little companies also stepped in to fill parts of that gap. I mean, the reason I think green screens as an example was successful is because there was this push to do a lot of pricing APIs and just get better like broker level pricing data and capabilities. And so companies stepped in that filled the gap on some of those capabilities so that everybody else could compete. And I think that's also the trend. That's also why I think Convoy platform, like, I'm excited about it, because it is about empowering brokers with all that tech and all that investment and bringing it to market more broadly. Because I think the challenge that Uber Freight and Convoy both had was trying to do it all. Like, you're solving every part of this problem with new technology, and it takes that level of investment. But yeah, ultimately I think the market is in a better space now. And what you see too is like the smart brokers are figuring it out and piecing these things together and staying a step ahead. And I also think that ultimately brokerage is still, like, relationships still matter. Relationship is a proxy for trust, and particularly on the shipper side, it's very hard to build that from zero, and they don't care as much about the tech. They still care about like who's on the other side of that.
Totally.
That call. So yeah, it's, but from back to the branding question. So from a brokerage perspective, I'd say it was a bit more of a mixed bag, but by and large, they value the tech, and they understood, okay, if I could use that tech, great. Right? If I can benefit from that, great. So Convoy brand had still positive brand equity there. On the shipper side, again, it was a lot about their particular experience and how it all unwound. By and large, still though, I'd say they all had a positive experience when it was operational, and they respected the brand from innovation, from a tech, from a capabilities. But on that broker side, we did want to give a little bit of differentiation, which is why we did Convoy platform versus just Convoy. Right. To say, hey, it is a different, like, we also just emphasizing that it's the tech, like, we're taking the tech to market. It's not Convoy as you knew it, which was a first-party brokerage with a lot of tech. This is the Convoy tech, the platform that enabled that we're bringing to market. So hence Convoy platform.
You're in the center of innovation here in San Francisco, and you're very tapped in. Generally speaking, our audience may not be as up to date with like very, very cutting edge stuff. So before we get back to the core of what you guys are building, anything that you've seen that you're like, okay, we need to pay attention to this because this is probably going to change the way transportation looks 5, 10, 15 years from now.
Yeah, one of my favorite quotes is that the future's already here, it just isn't evenly distributed, which is like Lem Gibson. Yeah. And I don't think there are new ideas this year that weren't here last year. It's just that things are accelerating, and it's the narratives that everybody knows. It's the autonomous vehicles and trucks and the AI implementations, which both continue to accelerate. And you feel that here. Certainly from an AI startup, there's probably 30 companies and just within walking distance here that are taking a stab at different parts of this. We've partnered with some, we're getting good results, and we're getting results that I can directly look at my bottom line and show the difference and that I can measure. And I do think that's just going to continue to accelerate. I think the challenge with AI particularly is there's so many different business models and people are trying to figure out exactly how that fits. You have companies that are trying to be an AI-enabled BPO, where they say just throw us everything and we'll solve it, and we'll throw AI to
What's a BPO?
Business process outsourcing.
Okay.
So they've got people in seats that are doing the work, and then they're layering their own AI on top of that because they think they can do it at a lower cost. So companies that say, hey, I'll do all your scheduling, or I'll be your full BPO, I'll handle all your inbound calls, or I'll be your outsourced carrier team, but I'm going to do it with AI on top of that. I think those models are interesting because BPOs blew up. Lean Solutions, Rapido, all these companies blew up during the pandemic. I think particularly because companies were very focused on OpEx reduction. So taking AI and layering on top of that is an interesting model, but there's probably 5 notable companies going after that model in different degrees. Then there are the companies that are the pure tech, and there's 2 ways they're handling that. One is pure tech, but I feel like they're overloading on too many SOPs, where they're just saying, hey, we will do all of these SOPs. We're going to create an autonomous agent that's going to do it all, which is kind of like trying to take a step beyond the BPO-enabled AI, where they're saying, we're not going to put a person in the middle, but we're still going to do it all. I think those are going to be really tricky because you're going to be in this quagmire of SOPs for all these different companies. And then there's a set of companies that have gotten more narrow, that we're just going to do voice. Happy Robot being a good example, where it's very voice-centric. They have incredible voice technology. And then also emails or handling specific use cases, and there's a mix of those companies. But I think my advice to anybody, though, is to be in the mix, to look, start figuring it out, because I think all these companies are going to evolve their business models dramatically over the next 2 to 5 years. The technology will continue to evolve. These use cases, there are real measurably beneficial use cases today that you can implement. And I don't think it's yet at the point where it's transformative because people are throwing a lot of this at the same SOPs. As we think about it, we talked about how from a carrier experience, they could do it all in the app and it's fairly automated already. A lot of what we've already engineered in the Convoy platform solves some of the issues, some of the problems that people are throwing at AI at to solve. Because what happens, I think, with AI is people think, oh, I can just take my process and port it over and it's done. Where the better answer may be take your process, re-engineer it, or re-engineer it to some combination of AI and other types of automation versus just porting it over. And that, I think, will evolve, and you will see different business models. Going back to app-centric carriers and the fact that today you have a whole wave of app-centric carriers, it wasn't until Uber came along that people really understood how a different business model could be enabled through smartphones in the real world. Like a lot of the early smartphone apps were people just taking their website and putting it on a smartphone, and that was that, right? And it wasn't until Uber that's like, oh, this takes all the capabilities of this device and changes a real world business model. I think we're going to have the same moments in AI where companies are going to figure out, oh, I can take these capabilities and just re-engineer how I work. There are companies trying to do this where you have there's a few companies that are trying to do the AI-enabled broker, right, where they don't have any people and trying to figure it out piece by piece.
Or try to converge towards
Yeah. People coming at it from both sides. I think that'll be a very interesting evolution to see kind of what wins there and what doesn't.
What do you think does win?
Well, I think the traditional service provider, I think freight is very sticky. I think it is on the shipper side particularly very relationship driven. I think it's a slow moving industry and there's a lot of momentum around relationships, particularly like long-term relationships with shippers. So I think traditional service providers are better positioned to just benefit from efficiency drive. I don't think that the way that shippers procure is going to change dramatically. I think brokers are in terms of tech adoption, brokers are ahead of the curve, or they do push the envelope because it's such a competitive space, and you're always trying to eke out a little bit of advantage. So brokers are capital constrained, but very eager to find things that work. And brokers also will not use it if it doesn't work. So it's a very like...
They'll be very vocal to tell you it doesn't work.
So it's a very like fast, iterative cycle of refinement when working with brokers on technology. And I think in terms of pushing the pace, that's like the best environment for a developer, because they're not, like you're not... Sometimes if you're selling tech into big corporations, it can just get buried, and people are paying the bill, but is anybody using it? And that doesn't happen at a well-run broker, right? If it's not driving value, they'll just cancel the contract next year. So I do think that brokers will evolve. My expectation is that brokers will evolve to be more and more shipper-centric, because I think the carrier side will be more and more automated. And I think the carrier side will be more focused on relationships with mid to large carriers and finding carriers with unique capabilities that they can partner with and build deeper like working relationships, because the broker still is an aggregator across multiple shippers, or it's a source of expertise, and a source of expertise that won't be replicated easily, because also if you're learning along with the AI as it's evolving, you're also then building expertise in how to apply that and be that conduit and to use that with your shippers and with your carrier set as well. So it doesn't go, that piece I don't think goes away. The engagement with shippers have more leverage ultimately in this relationship, so they're always going to have particular requirements that a broker has to adopt to, and I don't see that going away, at least not in the next decade or two. I do think that segments of the capacity and a lot of the operations there will be more and more automated. But on the other end, I also don't think, with AV coming up, I'm not super bullish that drivers are just going to be out of the trucks. I do think there's probably going to be a slow conversion there, and that will. Yeah, it's just, is it truly viable that the majority of trucks have no driver in them and that we don't have?
There's a lot. We're really at the tail ends of the delivery, especially, right? Like the highway stuff is. Yeah, maybe. Is one thing, right?
But then why would I not still?
It's like the land. You got to get out of the truck and take the landing gear out, right? Like you got to basically, what do you redesign the entire trailer, right? And then how do you actually swap out equipment or these assets out of existing supply chains, right? Because they circulate through, so you got to come around and swap them out.
Well, there's some ideal combination of like human engagement and automation that I don't think is going to be clear for another decade or two, because just like autopilot on a plane, people use that as an example of the fact that you still have a conductor and a train, like that you would expect that there's always going to be some exceptions or cases where you likely want somebody to be able to intervene. If you're out in the middle of Utah, it's just easier to have somebody right there with you. Drivers don't, and then from working hours, like if a driver can be on the road 24 hours but not working 24 hours and just chilling in the back, great, right? Because then you're getting significant efficiency benefits, but still having that resilience and that exception management and that capability, the expertise on site if you need it.
Yeah.
And again, like the tire goes flat, right? So you need somebody to replace it. So there's reasons you would want to have an expert user on board of that truck indefinitely. And maybe you have like caravans or two trucks. Like there's some combination there where I don't think I think it's going to be very hard to fully pull the driver out, but I think we're going to have different operating models in a decade or two.
I wonder if we ever see the convergence of more developed tech adoption for brokerages and carriers and autonomous.
I think it's
we're coming at the same time, right? Because if we're looking for supply chain resiliency and way more efficiency to like drive costs down, if a driver can work a longer schedule because they can rest and then be there for exception management, and then I hook up and I go, like we should be able to drive theoretically costs down to an extent because you get better capacity utilization.
Yeah.
There's so many battles along that. One state wants it, one doesn't. Yeah. Some drivers want it, some don't. There's so many things to battle on that way. Yeah. But it seems as if it's an eventuality from an efficiency perspective. It would help all of us.
I think the big structural questions are, do carriers become more consolidated because do capital costs get higher? And is it harder to be an owner-operator? Does it become less or more fragmented? I don't think the fundamental mechanics change so much in that having one truck or having 20 trucks, they're really, Like if you're a dedicated owner operator managing that and the rest of the infrastructure is out there, there's no reason why that model still wouldn't work if you're savvy and you're just managing the asset. And on the other side, I do think that like the broker procurement of capacity, if that becomes more automated, if an AV was totally automated, you can imagine just the system in the background dispatching trucks continually, right, and going. I do think we can
getting into the realm of like high frequency trading.
Yeah. So exactly. Like as soon as the door's shut on a trailer for pickup, a power unit gets automatically dispatched, which is the closest one. It just starts driving over, right? You can imagine that future in getting there, and then. On the back end, though, you'd still need, from a tech perspective, a system that's dispatching, that understands load delivery, that's managing that. And I do think then the broker as a consultant or as an engagement and how that evolves, if you're an expert on that freight type, on sourcing that capacity, and you have a relationship with carriers, again, I just don't see, I think there's always going to be some path by which you can be an intermediary, because on the shipper side, the other dynamic that's always at play is shippers view trucking just as a cost center. And so they're not investing in tech, they're not investing in capabilities, and the broker fills a lot of those gaps historically, because the broker is investing in capabilities, expertise, will try new things, and can do that on behalf of the shipper. And I think brokers are more likely to be a conduit for this tech or these capabilities into shippers than vice versa. So. Particularly for mid-sized shippers or shippers that, for your large global 500s, yeah, they'll make bets, they'll make investments, they'll try things out. But particularly once you get one tier down, it's just not, that's, from a broker perspective, that market's always going to need some aggregated expertise and some additional capabilities that brokers bring.
I mean, you just think about domain expertise and the best organizations that scale, it may be started by someone that doesn't deeply know the industry, but they go and find people that know it very well, and that application of the workflow with the new tech is typically what unlocks the next step. So for transportation companies, brokers, whatever, right, you're still going to have to know the business intimately well. Like, how do you operate what you do?
One of the fun things that's with Flexport that was eye-opening when I first started going out to customer calls is, on the NVOCC and forwarding side, most shippers only have 1 to 3 forwarders they work with. And so when you go into those meetings, you are the expert, and they trust you that much more. Versus when you're a broker, you're going in, they've got 70 carriers, you're one of many, they may ask you your opinion, but you're not their sole source of information. As where for a lot of our shippers on the Flexport side, we may be that primary source of information. And they are much more likely to use our tools, to use our portals, to use all that. And so that role of expert is that much more heightened. But I do, in my experience at Uber Freight and as Convoy, when you come into the table in that situation, they do view you, oh, you're a tech expert, you're like, they want a little more, they still view you as the expert. Right. And I don't think that, again, that role doesn't go away. And if you've got the salesmanship, you've got the capability, right? You've got the execution, there's always going to be a role there.
Yeah. Personally, what are some of your favorite challenges to try to solve? What do you enjoy working on?
I like the big, hairy, multi-decade type problems, because that really is what you get in this space. It is slow to change, and so digital freight matching started this journey. And by the way, I don't like that term, but I've accepted it.
What would you call it instead?
Well, at Uber, I would have just said the Uber Freight, but because it captures it all. But I think the matching is only one piece of it, because as I mentioned on the Convoy side, we do the whole load life cycle. So it's really about freight automation technology, or there's probably a broader term that could be applied, but the industry DFM is where the industry went. So, but it's been that journey started in 2016, and really for Convoy, 2015. So 10 years in. In fact, we recently was the 10-year anniversary of Convoy's founding. So it's already a decade into this journey, and I still feel like it still feels very early. I feel like we've got another 10 to 20 years before it is just the default way for a large segment of carriers and brokers to engage on a large portion of their freight. And it feels inevitable to me, because it's something to, from a carrier perspective, you won't go backwards, right? It's just certain tech just takes time to adopt, but it's a one-way door. It's just going to proceed forward. Meaning that once a carrier gets used to, if I'm an owner operator, once I just start booking freight on an app, it's why would I start picking up the phone again if I don't have to? I just want to do it this way, it's easier. And for our broker customers, once like their freight starts just magically disappearing and performing at a very high level, and I've got all the other benefits that come with it, like why would I back off of that? Why would I never go the other direction or turn it off? So
I think that's a good testament to what you mentioned earlier, which is the discipline in the business, right? This isn't going to be the last trough that we see, and it'll pick back up and then it'll be cyclical. But if you think tech's going to go back, you're wrong. And so if you don't push through the trough to be there when the tech is finally adapted, you're in a really, really dark spot, because drivers aren't going to stop booking loads to the app once they realize it's like very convenient, right? Or brokers aren't going to stop doing that. And so if you're not around long enough, sometimes it's survive in advance, right? Like you just need to be in the game long enough for the tech to get there.
The 10, 50 year hairy problems is where you like to really focus on. What is there a better way you can maybe kind of describe or encapsulate, like, you mentioned procurement being one of those kinds of problems. Is that something you think about a lot too, or how would you define one of those 10 to 50 year problems today? Is the Convoy platform that 10 to 50 year problem?
I think the adoption of it and the opportunity with it is like another 10 to 20 years. As I think about where the platform can go, I do think it's very helpful to think about a long-term horizon of that degree, because it's just a momentum building exercise. There's a lot of, to the earlier point about like what's the ideal end state of a broker, like to me that's a problem that's very interesting to me, that I will continue to chip away at probably for the next decade, because it will continue to evolve. This whole question, like I have thoughts about how it could evolve, but I don't know.
But
I would love to continue to work on that problem and to help brokers figure it out and to build tech that will enable that. And then like how to fully automate all these steps along the way, what's automatable. Like one of the big hairy problems that's always out there is scheduling automation, which I remember thinking about this problem at Coyote back in the day, and even back then thinking that this is like the final frontier because it's so fragmented, because people use so many different methodologies and there's no standardization, and there's also no way to really monetize that. And then at Uber, one of the last things I did there was help launch the scheduling consortium, standards consortium.
Oh yeah.
Now that was Convoy, Uber, and JB, and I don't think it has quite the same momentum, but the intention of that...
It's a GitHub repo, I think. I don't know when the last time it was touched, but yeah.
But the intention of that was that the more we can standardize, then it drives automation more easily, and we can all work together to like solve this jointly, because I think there's opportunities for shared resources around that problem, particularly because it's just nonsensical. If you think about it, starting with the facility, that you've got thousands of companies entering the same facility information, oftentimes duplicating and mismatching, and then facility hour, how the scheduling methodologies, re-entering that, rebuilding integrations on scheduling platforms, rebuilding RPA bots for scheduling, rebuilding email automations for scheduling. Now there are companies that are trying to solve this out there, like there's your Q'd and like some of the startups.
Yeah, I mean the technologies today, I feel like is actually enabling the ability to even remotely have a chance at solving that problem. I took a stab at that like 3 years ago, dynamic, appointment scheduling, and would call the drivers, but at least to your point you made earlier, shippers look at any technology on the freight side as a cost center, right? So how do you that was the really challenging part, of selling something like that to a shipper to adopt, right? Yeah. How have you noticed, or what are the best approaches for shippers to be like adopting anything like this?
Yeah, I mean, this touches on the earlier point of, if you look at this market, the owner-operators are the ones that will adapt tech the fastest, because it's almost like a consumer product. They can just download it and use it. Great. If it works well, adds value, I'm using it. Brokers would be the next fastest, because it's highly competitive, because they're eking out small advantages. It's fast turnaround, and if it adds advantage, they will use it and they will scale down on it. Shippers are the slowest because they don't have the capital. Like, they're outsourcing a lot of these capabilities to brokers, and oftentimes they're capital constrained. It's hard to get budget. They're getting pressure every year to cut people cost, and you also don't get promoted for making, it's very hard to get promoted in that role. It's much easier to get fired if you make a bad decision. So they're going to be more conservative by nature and less likely to take big risk. It's just structural. And you can probably count on one hand the number of shippers that are really innovative out front, that try new things, and make big bets, and make big investments, and continually trying to innovate in this space. It's just not super common, unfortunately. And so selling into them, I think the sales process where the shippers do make investment tends to be like a level above, or you move up to the ERP systems and the planning systems and those. And by the time, though, it kind of meets execution on the ground, that's where you oftentimes don't see quite as much investment. Now, there's always those opportunities. It's just navigating requires a little more deftness, and I think you often have to move from middle organization or top organization downwards and hit it on multiple sides. And it's much harder to sell through the front lines versus like you've got to be able to build those relationships and go at multiple levels.
Yeah.
And I think also where you see success selling to shippers is where people really push the thought leadership in terms of selling. Like you've got to like be at the Gartner conferences, right? You got to be selling the vision. You got to be, but it's still an education and an ongoing process. And there's a lot more just like priming the pump, I think, with shippers in terms of at a broker, I'll try it. If it works, I'll keep using it. At shipper, convince me, right?
Yeah. And are others doing it too?
Yeah. Are others doing it?
That's a big one. That's why the Gartner conferences are important too, for sure.
Yeah.
We talked about it a little bit, but the difference between the capital boom, pre or post ELD mandate, digital freight marketplace, now you see AI, now a bunch of companies. Maybe we're on the, raise again. What do you see as different? What do you see as the same? Because you've been through now both.
Yeah, the capital boom in 2016 to 2017, I think it was general capital availability and low cost of capital just drove this surge of investment into freight and logistics tech that had just never happened before. So I think a lot of ideas got thrown against the wall. The ones that had the most traction were these kind of Uber for freight, Uber Freight, Convoy. I think right before that you had seen a wave of like P44, and I think P44 benefited from that some because of timing, because it was kind of like you had MacroPoint, then you had FourKites, then you had P44 who kind of hit right as that investment wave was hitting, which I think accelerated them. But those were probably the two big investment areas. And internationally, of course, you had Flexport come along in that time horizon as well. And internationally, you saw companies like Sender and others who were like the international digital freight companies come to market. But I think the difference then was traditional service companies or visibility and ancillary technology. It wasn't like there was this core technology shift outside of smartphones, maybe some of that was really driving that wave of investment or change, is where AI is really about AI being this fundamental new wave, new capability and technology that's going to drive change across all industries, and then people throwing all sorts of different business models against that wave of technology. So that's the biggest difference. A perfect example is there's not like a clear designated winner to be the AI brokerage, right? As where I would say that given the level of investment, it was clear that Uber Freight and Convoy were going to outpace the market when it was digital freight matching and those capabilities. You don't see that same dynamic at play here. You see it's harder to pick winners too, and that if I look across the suite of AI companies coming to the space, there's so many different business models that it makes it very difficult to say that like this is clearly going to be the winner, because the combination of capability, like the team and the investment and the technology differentiation, and in fact the level of investment seems pretty similar across these different players. You're not seeing like somebody just totally outpace anybody else, which is also interesting.
Yeah.
And I think it's just the nature of everybody's kind of like, clearly there's value here. Who's going to capture the value though, and how's it going to play out? And also because just the nature of it, you don't need the core AI providers need massive investment because they got to scale out these massive GPU farms, right? But the layer on top of that, you don't need massive investment because you're talking engineers, right? And you're talking just lines of code. And of course, the whole thesis is that should be farther enabled via AI. So you're going to get high leverage out of these teams. And so you're not seeing that level of investment, or like with AV autonomy level of investment, because in that case it is physical hardware, you need specific capabilities, you need high investment. And I think the other open question, part of the reason probably why you're not seeing like that one, we're kind of early too. So maybe this does happen over the next 2 years where we get more differentiation. But two, the big investment is happening a layer down. And I think there's still this open question of whether or not, like, does an open AI or scale AI, do these companies become so capable that you don't need that second layer of capability on top of that? Which I don't see that happening in so much as I think you're going to have industry experts in terms of implementing that technology, but it's just what their value prop and differentiation is I think an open question. It's an interesting question. It'll be fun to see how this plays out.
If the ELD mandate did not happen in end of 2017, do you think, what do you think would be different? How do you think things would look different right now? Do you think that the DFMs would have been able to get as popular as they did? Or
yeah, I think I see those two things as somewhat independent in that I think the ELD mandate, initially there was a lot of questions around its capacity impact, and then there was also a similar play there where ELD companies, you had what's now Motive or always keep trucking, right, come to market and capture a significant percent of that. I think there's other device providers that were able to build businesses on top of the ELD wave, but they haven't fundamentally changed the brokerage market as an example. They've more built better tracking capabilities and resilience and solved the ELD problem for the market versus like truly, I don't think those companies are at odds with how the DFM market would have progressed independent of that. Okay. Because that was more throttled by app adoption, like getting drivers comfortable with using an app and being app-centric, and smartphone adoption, because recall, if you go back to the start of the DFM wave or early, it really started in 2011 or 12 when these models started to come to the market or people started talking about this idea. But back then, your average truck driver did not have a smartphone, really. I think adoption was, 11 or 12, adoption was still in the 50% range. So by the time we started Uber Freight 2016, I think we were around 80% adoption of smartphones. And now I haven't looked at the numbers lately, but it's, I would guess it's over 95, 98% at this point for smartphone adoption. So that was, a couple things had to happen. One, people had to get comfortable with smartphones. Smartphones also had to evolve because early on, your GPS capabilities, other capabilities were not as strong, so they had to evolve to be the everything device. And then drivers and users had to be more comfortable or device first in terms of how they engage in the world. Like you have a whole new generation, right, who doesn't pick up the phone, right? They text, right? Like, why are you calling me? I'll text you, or I'm going to interact with the device. And so that's just a cultural shift that also drove that change. I think there will be similar changes with AI, because that's the other part, is what's the interface? Like, how do you actually engage with it? Do I really want to talk to an AI continually?
Do you want to talk with vocally, or?
If I'm in my car, I do use I use ChatGPT and Grok in the voice mode quite a lot. I'll have like an idea or just be trying to think through something and use it as a mode. If I'm getting an inbound call, though, am I going to answer that from AI? No. Like, I don't answer a robocall. Why would I answer an AI call? Like, I'm not going to take more solicitations because they're AI. In fact, I'll probably take less. So I definitely think there's certain service areas that are just going to get flooded. I'm not going to respond to an email because AI versus not AI anymore, right? Yeah. So it's not like effectivity or conversion is going to improve in certain channels just by switching to AI. Even if in fact, it'll probably be the inverse, because if you lower the cost and now people just flood the channels are going to become less and less effective. So actually, I think we've already seen that shift where people are going to engage with companies and brands and people proactively versus necessarily take the call, right? And I don't think AI is just going to make that worse. So that's also why I'm so bullish on Convoy platform, is because it's app-centric. If I'm using my phone, I usually am going to use apps or play with apps, and I'm going to email, I'm going to text, right? Those are the channels I'm going to use. We just take a lot fewer phone calls or make a lot fewer phone calls than we used to.
What about on the other side of that, on the flip side of that coin, where maybe you have companies that are trying to, I know consumer app companies trying to build better email experiences because the noise is getting pretty hard to deal with. What about, how could that look like? Is there a future where you have more AI communication, but the interfaces that you use to kind of ingest and separate out the information that you're getting, kind of separating the signal from the noise, is helping?
Yeah, one idea that I heard a couple times early on in this AI journey was this like AI as API, right? Where view it as a way of collecting information or sending information but on more poorly formed channels where they might not be as robust. So via email, via text, via phone. Yeah. And so in that case, because again, you can imagine a future where two agents are just emailing or texting or talking to each other.
Yeah,
it already happens.
If they're calling each other, I was thinking about this. I was like, well, they probably will start calling each other, and like, are we going back to dial-up?
Yeah,
Yeah, basically. What is it? It is a universal address phone number.
Yeah,
right, between businesses. So.
Well, and there are already carriers that use AI to make outbound calls on DAT, and there are brokers that use AI to manage inbound calls on DAT. So those calls are already happening. I was at a broker last week who said, yeah, they get those inbound calls and they go to their AI routing system. So, and similarly via email, like if we send a automated scheduling email that has some sort of automated response, right? It's conceivable that it's just automated on the other side as well. Right, so effectively what you're doing is just lowering the bar for integrations and developing an AIs where you can do it via any channel versus having to have it engineered or written to a specific API.
Spec.
Yeah, written to spec.
Because everybody has a different spec. There's no common spec. Same thing for TMSs too. That's building out. Were you guys building out TMS? Did it make sense to build out TMS integrations at Uber Freight? How have you done that? Gone through that multiple times now?
Yeah, at Uber Freight, it was more shipper TMSs. So at Uber Freight, we were engaged with your SAPs and your Oracles and spent a lot of time with those companies. And specifically, the big initiative early on was pricing APIs and automation, which people will argue like who was first to market with pricing APIs. I still think Uber Freight was the first to market with, at least in terms of big public push with SAP, which was 2017, I believe. But it didn't really gain traction for a while because, again, on the shipper side, it just takes longer to adopt. They had their own investment in technology replacement cycles. And it's one of those things where no shipper wanted to use a single API. They wanted all their providers to be on APIs. But yeah, so on that side, we did a lot of TMS push. For us, though, now, it's Convoy platform, it's all broker TMSs. So it's a whole different set of companies. And broker TMS is a very different operating model.
Different API spec, I'm assuming? Mm-hmm. Okay. Did you just manage every single integration? Because there's a fair amount of TMSs, right? It's just each individual integration needs to have its own support team?
There are. Fortunately, like if you get to the top 10, you've got 80%. And we partnered with some SIs as well as some system integrators that have experience, that have streamlined that process, that have been great partners. Okay. And then over time, though, the TMS is also, this will take longer because on the brokerage side, my ideal vision of the world is that it's totally automated. It's invisible. It's as visible as you need it to be, but it can just happen in the background, meaning that it's just like having a carrier rep that's working, that you don't ever have to look over their shoulders because loads are getting booked, getting managed, getting paid, right? And you don't even have to worry about it. And you can poke your head in whenever you want. You can call the carrier if you need to. But otherwise, like that whole process can be automated. For that to happen, though, the TMS has to have all that, a lot of capability built in. Because it's not, for brokers too, particularly if they're not going to use this for 100% of the freight. So they also have to be thinking about some higher order tactical questions, like if this is going to book these loads, what should my team be working on, and how do I make those trade-offs? And to be able to inform those trade-offs as a carrier manager, you need to have a lot of feedback. What loads are likely to book and at what price on this, and then how do I serve that in my TMS? And then how does my TMS help me prioritize which loads work and why? And there are there's certainly TMSs at companies like Uber Freight and Convoy Legacy and some of the bigger brokers that have those capabilities built into them already. But a lot of the more the publicly available TMSs that mid-sized brokers don't have that level of sophistication built in. Okay. And I think that's the exciting and interesting part of working with the TMSs, because I think they all want to kind of ride the wave or push the wave or be out front in terms of building out new capabilities, and are trying to also make sense of that. And so thinking about how more of their workflow gets automated forces you to also think about, okay, well, how do I rework what that looks like internally. Because you can imagine at future state that, let's just say you were doing all of your booking off of AI bots, either inbound or outbound, but maybe you had different ones working different agents working different regions, right? But you'd still have to have somebody coordinating that, prioritizing that, knowing how to trade prices off, because maybe this one's not successful because you told it you could only pay up to, just like a rep, right? You can't pay over 800 and it's got an offer in hand at 875 and it's 3 hours to book and that's all you got. Like, do you take it? Like those sorts of tactical decisions, you'd still need a layer and a coordination layer within a TMS to make those trade-offs. And then how do you coordinate across the different channels? Because maybe Convoy platform is booking 20% of your freight and it's great and it's really good in certain areas. And then you've also got this, you're using one of the AI providers to do inbounds and they're doing great and they're booking 20%, but how do you use them? How do you trade them off? Like, what are the benefits of each? Like, all that eventually should make its way into the TMS so that I can just quickly make sense of the day, right? Okay, I've got 3 reps. I'm going to have them focus on these loads that just land in Montana because we got no coverage, and I don't trust that they're going to work on the automated platforms. And the platforms are telling me that they, their coverage is 20% on that. So also, I got to think about price, maybe. So how do I tactically make those decisions and the trade-offs day to day? And it's a whole new set of problems. And I think the challenge with the TMSs too is that they are all built for slightly different scale. So with Jeff building Mastery as an example, like he has, like Bazooka was built for fully scaled brokerage, and a lot of the capabilities in there don't make sense if you only got 50 loads on the board. Like why would you need that, right? Sure. But if you're managing 2,000, 10,000, you need a whole different set of coordination and tactical tools to manage that. A lot of the, I'd say, mid-sized TMSs don't have all that built out, but as things become more automated and their ability to scale changes, like that whole set of tactical tools needs to be rethought as well.
You've been at the ground level of some of the most tech-forward organizations in our space, tech-forward that we've really ever seen. 2016, 2017, Uber Freight. What was that like in San Francisco as this new tech provider in the freight space? I feel like that was probably a cool time.
It was, it was incredible as a point in time, because also, remember, I came through that because I was advising the autonomous trucking company Auto that got acquired by Uber. So combine all those things and it was just like, wow, there's so much going on here. And coming on to Auto, we talked about this a little bit at lunch, but it was like all like electrical engineers, mechanical engineers, they had lathes, they had laser calibration systems and lens cutting tools, and it was just this crazy place, and super smart people, many of who've gone on to do great things are still in AV. And then you get acquired by Uber, and at that time, obviously Uber, like one of the fastest growing companies ever, hugely successful. As that deal was going through, it wasn't clear right out of the gate that we were going to be able to do Uber Freight. There's a bit of back and forth, and then Anthony and Lee were also just trying to sell it through to Travis at the time. So we had been working on this presentation one night. It was like a Tuesday night, I believe, and Anthony Lewandowski, one of the founders at Auto, got a call, and it's Travis, and Travis is like, oh, what are you working on? I was like, oh, we're working on this like Uber Freight pitch for Travis. And he's like, well, I'll just come over now and give it to me. It's like 9 p.m. And so then, we basically walked him through this whole presentation it was still like 1:30, 2 a.m. And he's just hitting us with questions, trying to understand it, where it's going to go. And like that was like, okay, this is a fast-moving organization, and clearly like Travis is into the weeds, super fast learner. I mean, it was super invigorating. And then, but then we had to start it. And when he started brokerage, we didn't have the tech. We were building the tech, so we didn't have the tech. We just had to sling freight. So we started calling plastics companies in Texas and just scrubbing the DAT to cover freight, because you need to build some volume on the platform. Also because we didn't want to launch the tool and have nothing on it. So between September and when did we launch? May of 2017 was when I think the app actually went live. And in that time, we were just manually building freight and booking it via Excel. Not Excel. Google Sheets. Sheets. Yeah, we had a TMS built in Google Sheets.
Yeah, typical good old TMS Sheets.
And then we made an acquisition of an acquihire of a company called Forefront, which is a small brokerage in Chicago. Yeah. Again, that team's gone on and done great things. A lot of them are arrived now.
Yep.
And that was our seed in Chicago. We started building on that. And then at that point, we were running the whole thing off Keypoint, which was
Man.
yeah.
That's DAT's.
Yeah.
Yeah.
And then finally the system started to go live. We started to build out the tech. The tech team was always extraordinary from day one because Uber was able to just attract incredible talent over there. So very strong team. So being able to work with a team like that was just very inspiring from the pacing and just capability and what they brought to the table. I'd say Uber also, though, it was very intense and a little bit of aggressive, maybe the right word.
Sure.
It was, just internally fast-paced, but everybody had high ambitions and everybody was pushing the pace pretty quick. And so just adapting to that. I'd say it was somewhat familiar coming from Amazon, but Uber was a little more, I'd say, fast-paced, entrepreneurial. There's where Amazon, a little more big company structure, but also highly execution-oriented, highly action-oriented, and highly technical as an organization. And so those things all transferred over pretty well. And I'd say Uber was a little more just take chances, keep moving, keep pacing. And so just throwing things against the wall. And Amazon was a little more locked down on those sorts of things, just a little more disciplined. And so it's a nice mix. But it was like a moment in time. And then just being Uber automatically opened up so many doors. And I think that's also, we talked a little bit earlier about how there's always a little bit of bad sentiment from legacy brokers, like new guy coming in, getting all this investment, have they earned their stripes? And I think even more so as Uber, because you just came to the table and people were like, oh, doors would open, right?
Right.
And I think certainly our early sales team had a easy go of it, and we were getting contracts with Fortune 500s that would be a 4 to 5 year cycle if you're just starting a broker from scratch, is where first few months we're signing deals, and it's like, oh, okay.
Brand recognition helps a lot for sure.
Yeah.
Wow.
And that just gave it a lot of motivation. And also then you're in the room with a lot of very smart people, because again, these shippers, you're talking to experts that have been working on these problems very long, that often wouldn't be engaging with a brand new company like this, but they knew the level of investment we brought and the capabilities of the tech, and that just accelerates your thinking too. So it's hard to, there's so much, it's such a privilege and a blessing to be in a place like that at a moment in time, because certainly even going back to Coyote, the first couple of years you're grinding, right? So you're going from the bottom up at every level. And at Uber, you're stepping in you're stepping in at the top, right? And then just building from there, it's hard to describe, but the pacing then is just that much faster.
The level of expectation that a Fortune 500 shipper has of your ability to execute is so much different than an SMB or lower mid-market shipper.
Yeah.
There's no time to play around.
Yeah.
You got to bring the heat. You need to be sophisticated. And with the brand that Uber and Uber Freight is, that's the expectation.
Yeah. And honestly, actually, just to throw a compliment back your way, one of the things that I was so impressed was Molo being able to build in that environment, kind of and it was always positioned a little bit as a counter to Uber. I mean, that was part of Andrew's narrative.
That definitely was.
Trying to be the yin to the yang. But if you look at how you scaled, and again, relative to all the other brokers in the space, just how hard it is to step in and immediately get large contracts. I mean, part of that I think comes with credibility. But yeah, Uber was instant credibility and expectations as well. Yeah. So if you're not performing, and the yin yang piece where you have a target on your back, right? So you definitely are always fighting that too. There's always a counter narrative, and so we were always trying to figure out how are people pitching against us, because it's we're walking in the room as Uber, we got certain credibility, but then 20 other brokers are coming in and saying, oh, those Uber guys, why would you ever go with them, right? It's just the nature of the business.
I definitely said that. That's 100% part of conversations that were had, right?
Yeah.
Well, what was some of the reasons you'd give?
Oh my gosh, right? They're underpricing, right? They're trying to gain market share, so at some point rates are going to go up because they've captured market share and done enough service to understand the market relative to what they're trying to do, right? You go and
you need people. Yeah, if you're you can't just throw a load on a board and expect it's going to work. You need people to monitor and match it.
What was the thought process internally at Uber, that was maybe an argument being made against Uber, how you'd come out of that even if probably over time, obviously.
Yeah, I mean, ultimately the sale worked because the product worked, right? So ultimately you win in the market by demonstrating that it actually works. I think the challenge in brokerage is you can definitely sell ahead of capability quite a bit because it is so sales driven. it's harder to do that with the larger shippers, but you can get in the door. And the reason we say it's a relationship-driven business is because I don't know you until like at the end of the year, I can look at the scorecard and say, yeah, you delivered on what you said. But at the beginning of the year, I don't know you, so why am I going to give you a chance? What are you going to sell me on? It's going to be relationship-driven. It's going to be personality-driven, right? It's not, you're not going to trust any data and put in front of you because there's 30 other people right behind you. But at the end of the year, I'm looking at the scorecard, and this is where being at Uber, why I believe and still believe in the model so heavy, is at the end of the year, you look at the scorecard and we're at the top of the scorecard. Like Uber and Convoy always outperformed in terms of on time and because the tech worked. And so we were getting countersold more on the soft touch points or the other, and there are definitely shippers that prioritize the soft touch points over the hard data for, and it's just a trade-off in terms of how they engage in the market. And it's if you're trying to over-engineer an operating model, you can always find a shipper that just wants you to pick up the phone. And if you pick up the phone right away, you're going to get the deal. And they just want to know that somebody's caring and focusing. And it's hard, you can't do that with tech, but you can engineer a better solution, but oftentimes people still want to know that somebody's going to pick up the phone, and answer. And so that's usually where we would get countersold. It's we're still got people on the other side, and we're going to provide better service. We're going to pick up the phone. And because the other thing we did right away at Uber was moving a lot of the CS to Philippines or offshore, right? Which, and we reverted on that a little bit too, because again, it's I don't want to pick up the phone, call my broker and get routed to the Philippines. I want to talk to my rep, right? And if I don't get my rep, right, then I'm not happy. Even if the service is 5% better. It's that one time I need to make a call because there's an issue on a Friday night and you don't pick up the phone. Yeah. And so, you got to balance those things out.
Is that something that ever can be replaced? Is that being able to call somebody that you know, or give freight to somebody that you don't have a relationship with? Is that?
The counter argument I would always make early on is you don't know your Uber driver. You ultimately trust the Uber driver because they've got a rating. You trust Uber. You trust their vetting system. You trust the infrastructure, and there's just more visibility, because information builds trust. So I've always been big on the more information we can share, the more transparent we can be, the more visible, within reasonable limits, the more trust you build. And so a relationship is a proxy for trust. It's just, I have a relationship with you, I've known you for years, all my experiences have been positive, thereby I expect my next experience to be positive, right? Versus I go to Amazon, I don't know the company I'm buying from, but they've got 5 stars, they got 30 reviews, looks pretty good. I trust Amazon, right? And it's coming out of Amazon warehouse, so I trust Amazon, so I'm going to order it. Or my driver's 5 stars, he's done 75 rides, sure, I trust him. I don't have a relationship with him, but I trust him. But I'm hiring a new brokerage. I got to learn, I got to build a relationship with you, right?
What's that missing piece of, that missing data point?
Yeah, ratings, transparent, broker ratings is a thing, DAT and others have some broker rating capabilities. I think that's definitely, the more information you can provide on that makes a difference. Also, part of what we're trying to do with the Convoy platform is ensure on the carrier side, people trust that they're vetted, right? So if I'm a broker, I know I'm going to get a good carrier. It's not just Wild West, right? It's more like an Amazon experience where I know it's you're managing the experience, you're managing the execution, and on the other side is a carrier that you vetted. So it's a trusted experience.
I also think there's a lot to be said about that first experience with a new provider for any solution that you're purchasing. And it doesn't matter if it's an Uber ride or a hotel or a restaurant or it's your first load, that needs to go flawlessly.
Yes.
And it needs to be such an easy just experience for the buyer. And that sets the precedent for how the rest of it's going to. You should get a longer leash, right? Something's going to happen. Yeah. It'll go wrong. But if that first experience is 100%. Poor, you're probably not going to come back.
Yeah, what's interesting is Flexport, being as tech forward as we are, Flexport was built really on hypercare, really account by account level service, end-to-end level service, same, one throat to choke, one phone call, and then using tech to enable that. So I think that's ultimately the model, in logistics, that works. Is you gotta be able to hit both sides.
So a fully autonomous brokerage, would you say, is that a dystopian future at this point? Basically,
I think so. Yes, I think it's about automating the rote tasks, right? The stuff that doesn't add value. I think there are more of those on the procurement side, calling a driver and asking them where they are. That's not a relationship building exercise, right? Yeah. if a shipper calls you because they're concerned or they have a question or the market flipped or they need to understand what's going on, and you answer the phone and you give them information, that's a value-adding transaction, right? Or conversely, if a carrier has an issue, breaks down on the road and can't figure out what to do, and they need somebody to help them out, and they know they're running late, and you pick up the phone and help them, that's a value-adding transaction. Conversely, if they break down and they pull out the app and it says, "Oh, are you running late?" Yes. Why? Yes. And it's 2 clicks and they're good. That's also value. So it doesn't necessarily have to be person, but you have to solve the problem, and you have to limit the steps to do that and make it simpler, and you have to just build that confidence that it's going to happen. And it's just like making a promise, being consistent, all the same stuff, but some of it's so fuzzy it's just going to be hard to solve with tech, and others it's easy. But the pure rote executional stuff, that's the low-hanging fruit. That's the stuff that should just go away. I shouldn't have to make somebody fun. And even carrier sales, as much as I love carrier sellers, a lot of that work is these 5-second phone calls where you're just on and off and off and off.
Most of which you can't even keep up with.
Yeah. And you're not building a relationship with that driver, that carrier, and that. You're just it's super transactional. But if the driver has an issue, or say I'm a carrier, and I'm I just got to get my trucks out of South Dakota. What are my options? And and you're problem solving for them. That's different than just oh, I got a load here. What's the rate? Okay,
You basically start. That's a act of working together.
Yes. Yeah.
Problem solving is complex, especially when there's tribal knowledge necessary to move from point A to point B.
Yeah.
And that's where the human element and the strategic relationship and the strategic selling aspect of it, regardless of what side you're in, makes a huge difference.
And you can probably enable that with AI, but you still so in that example, let's say I'm a carrier and I end up with 5 trucks in South Dakota, I can't get them out. I call my broker partner, and I can imagine them sitting there and typing in their system, "Hey, can you find me any options out of South Dakota? Oh, it's these 3 shippers, one of them, 2 are active, one's not. Here, do you want to contact them? Yes, contact them. Auto dial it. You can streamline all that through automation, but you're still going to want somebody talking them through and selling them on both sides of that conversation.
So when do we expect the Convoy chatbot for drivers?
We have internal chatbots and capabilities, but to a driver,
in the same way you drive and use Grok, right?
Well, if they call now, they'll get AI voice on the other side.
Okay.
We'll do IVR, and we'll route it. If we need a person on the line, they'll jump on the line. But we have Happy Robot set up now, so if they call in, they get to.
Do you think that changes interfaces? Grok, when I ask Grok, it's giving me text answers, and it's one of the things I think about is how do I. What is there?
Do you use the voice? I use the voice.
I do use the voice more now. Recently, in the last couple of weeks, since Grok 4 is pretty good.
Yeah.
Do you think that the information that is being conveyed back from these models is just going to start to get? I've been hearing these trends of dynamic UI generation, for example. Do you think that that's something? Could you envision something like that where drivers are talking to the AI, Convoy AI? And they're saying I need what are my options to get out of South Dakota, right? And then is it displaying information to them just all via voice? Does there make sense to visualize some stuff?
Yeah, that's a great question. I do think voice makes sense. I think the interface is a very controlled experience. So if it's all via voice, it gets a little fuzzier, right? And you can just work faster with a keyboard or a device than you can. If you just got to click on something.
Right.
And we've all tried the legacy of systems like Alexa and Siri and whatnot, and how you initiate them, how you integrate them. I think there's still some open questions on that from a process perspective. But
I only use Siri just to set my alarm, because that's all I can do. But
yeah, and I think the threshold for trust is also much higher when you're dealing with an artificial interface like that, because it's the example, there's so many movies or skits about it going off the rails, right?
Yeah.
Or not misinterpreting what you're saying. Obviously, that's gotten significantly better just in the last 2 years.
Yeah.
But I still think that for certain things, just like in the car, where there's a big push to go to pure screens away from buttons, and now there's kind of a reversion back to buttons because people prefer the tactile buttons for stuff, and they're easy to find, right? And just from a user UX,
it's like a compressed. I look at it in a way, it's a compressed representation of intent, right? You can kind of predict UI or buttons is just the company that made that button is kind of guessing what you probably will want to do. And it skips you a couple steps as opposed to typing it out or chatting it out, right?
Yeah.
It feels cumbersome sometimes to just have to say out in a full sentence exactly what you want.
Yeah. So I think there will be a convergence. I don't think that device or apps go away. I don't think that keyboards go away, right? I just think we'll be supplemented by voice capabilities.
Convoy platform question. Any fun stuff on the roadmap that you're free to chat about?
Free to chat about.
Yeah.
There's a lot of fun stuff on the roadmap. But the one piece that we are testing out, we have customers now that we're doing automated dock management as an example. So there's a few touch points with the brokers that aren't fully automated that we have the ability to automate, but depending on the broker's policies, they may not want to automate. One of those being document management, because we provide quick pay, but it's based on an SLA from a broker, 24-hour turnaround on dock. Well, not all brokers can meet that, and there's a cost. And we've already engineered a super low AI-enabled process there. So just let us do it for you, no charge, because we know it's going to create a better carrier experience.
Yeah.
But it's a little bit of letting go of control, setting rules. Scary. Right. That's again, there's a lot of change management with how we go to market because you're giving away a certain amount of control at each step. And so how much you want to give and how much you want to retain, we give them total optionality. But what we find is they get in, tight controls, slowly let the reins off. The other side is carrier approval. So some have fully automated carrier approval, some don't. We're definitely shoring up capabilities there. We have this incredible fraud and compliance tool.
Just to make sure, fully automated carrier approval for them to accept the option that you all
perfect example. And I was with a broker last week who was saying, hey, I had an overnight booking, but nobody was watching it, so we didn't approve the carrier, and we lost the truck. And I'd like to just allow it to be automated overnight. I'll still want to watch it during the day.
Yeah.
We'll still go through the normal compliance and send them through our onboarding process, our normal onboarding, but for the weekends or overnight, just let it automate, let it run.
They'll kind of get comfortable with what happens over the weekends, and maybe is that lower risk freight? Would that be a good way to put it? Or is it the same risk?
Typically
same
higher
risk. Yeah, higher risk.
And so they're just kind of rolling the dice that hopefully it's gonna be all good.
Yeah.
Right? Okay.
I mean, you just think about you normally have X amount of people staffed to work through risk mitigation, and now you have one or whoever might be on.
Yeah, whoever's checking.
Just more stuff that happens. Fun question. I'm intrigued to see which brokerages that are used in Convoy platform let go the most, right, and allow it to help them grow their business more effectively. Because it sounds as if some orgs are taking steps to let go of the reins. You're talking about document automation or approvals and all these things, right? Which of them grows most effectively and then can go? It's because of the Convoy platform, right? We're more focused on other things because of this. I'm intrigued to see what that looks like.
Yeah, and it really is. So I know we throw Great Lakes Transportation out all the time, but it's because they were a user before that we turned back on. They had already started to adapt their processes around it, and then they've only continued to scale usage, and they've grown through that process. And Eric is a huge advocate, the CEO, founder over there. And so that's an example where it's certainly they've seen direct benefits to the business of using the platform. And then we've been ramping quite rapidly. So there's a lot of our recent brokers are more new to the platform, but I see, we were just out with two of them last week. What we're trying to do is be on site for launch, be on site in 90 days. Usually at 90 days, it's more, again, about process questions. Okay, I implemented it, but and how do I get more out of it? Well, you need to rethink how you think about prices, or have you thought about putting these loads, or why don't you put those, and those sorts of conversations. But we never get in any of those conversations where they say, hey, it's not working for me. It's always when the loads it's booking, it's magical. How do I get more freight on this platform, and how do I scale up the usage of it? Yeah. Because it is, when it books a load, it just magically comes off the board and you don't have to touch it. The reason that they wouldn't book is typically most brokers, again, it's the control thing. When they turn it on, it's this black box. How do I make sure it's less of a black box? I really want to understand it. I want to see what it's booking at. I want to manage the offers as they come in, and then slowly I'll let go and give it more and more freight and integrate it more fully into the process. The other is there's always just some people management aspect, because if I've got a bunch of commissioned reps and all of a sudden loads that they want to book are disappearing off the platform, what does that mean for my commission and my opportunity, and how do I manage that? And every broker handles that slightly differently. But
it's just interesting, right? Because you think about some of the most developed brokerages that have incredible carrier networks, and they're really good at what they do because they've got years and years and years of data. Teams know who moves what, the system knows who moves what. You've got other players that are shooting from the hip, doing their best to figure out where that capacity is. You introduce an opportunity where they get new capacity, and now they don't have to think about that. It's a paradigm shift in terms of finding the right types of carrier partners to execute. for the shippers?
Well, an easy way that I usually introduce it is more like it's a hot pod option, like which, at Coyote, new reps, you'd say take the inbound off DAT. It's like, well, think of it as like this is your source for long tail owner-operator capacity. So if you were going to put a bunch of freight on DAT, focus on that out of the gate, and then expand it from there. Use it how you will use it. But for a broker, it's an evolution because it's just a different way of booking freight. So got to learn it, got to understand it, got to get comfortable with it, get your hands on it.
Totally. And it's just like using any other tool. Typically there's, with anything, it takes time. People are afraid of it at first, and then you start to see the long-term implications and how helpful it is.
Exactly.
This was incredibly insightful. I learned a lot. It was really cool to see your experience just being at the ground level of the most innovative space or innovative place in the country from a tech development perspective, but like we're freight nerds, right? So you get to do it from the space that we know really well.
Yeah, I appreciate it. It's fun doing these.